Hey friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show. We look at the technical charts and then try to understand what happened in the market and plan for a bit of trade for the upcoming week that's starting from tomorrow, September 16th, Monday, 2024. So let's get to the charts first here. So here we have an ascending wedge, and market is at the top of that wedge and then reverse, and then that's how it is. It's a narrowing wedge that's seen for the Nifty, and for the daily charts also we have another wedge and some more space left towards the top of that. Banknifty is an even more narrow ascending wedge, clearly can be seen, but on the weekly charts it has more space to move up, and daily also showing a parallel channel trend line and lots of space before it moves towards the 54,000 and all that. So the highlight for this week is that market broke out and made new all-time highs about 25,350. Can you believe that? It was a sharp dip of forming a bearish engulfing previous week, and this week it has surprisingly reversed, ignoring the bearishness, and then completely gone the opposite way, forming a bullish engulfing and then trapping the bears instead of the bulls now. Market is all-time high. It's 2% move, 409% up on Nifty. Comfortable close about 25,000 and 69% rally. Can you believe that? From 2022 July, where the previous major swing low is there. So Banknifty also did the same, although it's quite a bit far from the all-time highs. It did make it 2.7%, 71. So nearly 3%, about 1,370 points up on the Banknifty, and it also closed possibly comfortably above the 20 exponential moving average. So that's the highlight, and that's how market moved last week. So it's a bear trap, not a bull trap. It trapped the bears last week and formed a bullish engulfing weekly candle on both the indices, Nifty and the Banknifty, and the daily time frame. After that big breakout move, it paused a little bit with small bearish candle formed on Nifty. Almost looks like a hammer, and it's an indecisiveness in the Banknifty of a dragonfly doji after the big breakout move that happened on Friday. The daily candles are showing slight bearishness, but it's mega bullish on the medium term. That's what the candlesticks are showing, and it surprised the market because the fact that it has completely turned the opposite. Bearish engulfing has turned to bullish engulfing with absolute no impact on the candlesticks pattern. So that's a surprise move, I believe, ahead of some event, and that's when normally the technical candlesticks completely gets ignored, and that's exactly what happened. We have a Fed event that's coming. Now, if you look at the Bollinger Bands, so this is what we're talking about. We'll come to the Bollinger Bands. Let's see the candlesticks. See, it's a bullish engulfing now, and previous week it was a bearish engulfing. Bank Nifty, bullish, bearish engulfing turning into bullish engulfing. Bullish engulfing indicates there's very high chance that it can make big moves on the upside. Right, so market did a surprise move, and daily candlestick, if you see, you can see that the 5 days of candle is a complete reversal and full recovery, and then a breakout from there further. Banknifty also 5 days of move, 1 2 3 4 5, so full recovery, and then a breakout further from there. That's what the daily candles are indicating. But you also know that there is a change in priority zone. This is a previous zone for where the market has broken out, and that is acting as support. So there's a change in priority bounce up also that was ignored previously because of the fact that they had a bearish engulfing weekly candle. So exactly what happened this week. Bollinger Bands, if you see, you can see that it's once again getting on the upside expansion with the bullish bias on Nifty and the Banknifty both. Consolidation is over so fast when market has broken out to make new all-time highs. That's about the candlesticks and the patterns and the kind of move that happened. Now let's try to understand it from the momentum and the trend perspective. So momentum is measured based on the RSI indicator, and trend is measured on the ADX indicator. So momentum and the trend has climbed back to the bull zones, you can say. Right? Actually, momentum has clearly climbed back to the bull zones on the short term or on the medium term, and short term also momentum has picked up, but Banknifty is slightly little more to move up to the bullish momentum. Right, on the daily time frames. On the weekly time frames, absolutely. So momentum is substantially gained. So it's it's sideways and rising, almost hitting their momentum in the Bank Nifty. So otherwise, if you see overall bullish momentum is there, momentum has gained a lot. Now, if you look at the trend indicator ADX, you can see that the Bank Nifty is bullish, and Nifty also is bullish on medium term. The short term, there is some bearishness still left behind, but that strength of that bearishness is slowing down. So short term trend has picked up, short term momentum has picked up, even the medium term momentum also has picked up. Right? It's just the medium term trend also which need to catch a little more than will happen in the Bank Nifty for the most up towards the all-time high. So the VIX has crashed down 18%. Previous week it was around nearly 15% of hike, and it climbed above the 15. Now it's 12.55 is the low volatility reaching a sharp drop in the VIX is what we had seen in the market broke out to make the all-time highs. Moving on, if you understand the open interest, it was a long unwinding previous week and then short build up. It's absolute negative built up on the last Friday and last Friday, and this week we have a complete opposite plan with a short covering on Nifty and a long build up. With the expiry of weekly expiry options of September 14 Bank Nifty and September 15 Nifty, we had a PCR which is extremely bullish about 1.1 and 1.5. Right, PCR and futures options. So OI is completely showing bullishness. You can see that lots of support there in the OI data that it's seen there. Based on that, we can derive the next week's options for levels, support resistances, and also we can derive the same support resistances from with the help of the charts as well, which is there here. So first, let's look at the OI level. So OI is indicating the highest put writing is at 25,000 and the highest call writing is at 26,000. It's a 1,000-point range, but absolute bullishness can be seen there. Second highest put and call writing is seen at 25,200 and 25,400. Bank Nifty on the other hand is showing 51 and 52,000 with the highest put and call writing. Support seen. Second highest put and call writing is at 51,500 and 53,000 the highest. Second highest put and call writing. Support resistances are there. So there's not about the bullishness. The levels are pretty much clear that supports would be for the Nifty 25,000, support for the Bank Nifty would be at 51,000, and resistance would primarily be can go as high as 26,000, and resistance could be seen substantially at the 52,000 with the Bank Nifty case. So what are the charts saying? The charts are saying more or less the same story. Now these levels that you see are what the charts are showing. The charts, what they say is the first major resistance that's going to be there on the upside would be to take on the all-time high that was made the other day. That's a few hundred points from where it is now. 25,450 would be the zone for resistance first, and after that you have the 58. You have a 58% Fibonacci extension level that's coming at 25,750. That zone is 25,800. That zones. So that's the zone where next resistance could come in. Market and move another 500 points just like that, right? And that would be the place where it's also a confluence of the channel trend lines top, right? So we have to be pretty cautious there at 25,800 zones. And downside support to come at 20 exponential moving average at 24,999. That's 25,000 is going to be the major support because it has a support zone which was a previous resistance zone, so it can have a change in priority. Support zone it can be in confluence with the 20 exponential moving average at 25k. So 25,000 is the major support on the downside, and after that you have the 24,854 which is good enough support, and then you have a 24,600 following that, right? And then that's because it's a 50 exponential moving average, and the 50 exponential moving average of 24,600 is breached. That's the time when we may worry and look for 24,000 supports. Right? That's Nifty levels of support and resistance as per the charts. For the Bank Nifty, the first resistance will be taken out of the 53,000 and the 52,830 where there is a previous resistance that's coming. So 53 will be major resistance, and after that 53,350, which is the all-time highest. Next resistance on the upside. Downside similarly, the first support will be 51,200 and 51,150. That zone has got 20 exponential and 50 exponential moving average supports, and then if that is breached, we'll have to look at 5300 100 exponential moving average also there. So 51,000 is going to be a major support. If that is breached, then it can go as low as 5300, 50,000 also. Right, so that's resistance support in the Bank Nifty as per the technical charts. That is exactly what is put in here, making out of these numbers. So we'll have to correlate between the Nifty levels on the OI. OI can change again because 3-4 days are still there for the expiry, but charts are no. So if you have to come to a conclusion support resistance based on this correlation, right? That's about support. Let's move on and see what the sector indices are showing. So it's a completely reversal that's seen across sector. Big breakout moves. All of the indices, the major indices, all of the sector indices are showing that it's up more 2.7% on IT, 2.3% on metal, 1.15% on auto, 1.8% on pharma, 3% on FMCG, and 21% upside. So one thing that we can notice is that it's a defensive sectors of the IT, the pharma, and the FMCG that's bullish enough on both time frames to take long bets. Others are catching up, auto, metal, and reality are catching. But across the sector, bullish move was seen last week, and we have three major defensive sectors that's holding the market. Right, you can see that the IT sector is holding the market. It's breaking out, and then it's bullish momentum and trend. The metal sector has undergone small reversal. It's in the sideways and starting to climb back. While the auto sector is also consolidating slightly, trying to move up to the top, but bullish momentum and the trend. Pharma extremely breaking out and then bullish momentum and then trend is obviously seen there. And FMC also catching up and then after a slight consolidation, it is breaking out and then hit the top of the channel. Time to be cautious, but it's bullish momentum and the trend. Reality is catching up. It's still consolidating. Right, it's in the sideways. So two sideways medium-term indices would be the reality and the metals, which is slightly struggling, but others are all extremely bullish. So moving on, if you try to understand the heavyweight stocks that contribute maximum to the indices, if we can see that HTC Bank has moved up substantially good, and then but still good volumes are also there, but it's still in the sideways as per the momentum. It's the trend is bullish. Lines also has moved up, but it's in the sideways again. So then, who is bullish on the heavyweights? It's ICICI Bank, which is comfortably taking a bounce up from the RSI 60 and extremely bullish. And candle is also solid wide range bullish candle with the rising momentum and trend. So absolute bullish ICICI Bank, but we have trouble still. Although we have a green close on both the HDFC Bank and Reliance, it still is in the sideways with respect to medium-term momentum. Now, IT sector. Absolutely bullish both of them, and Kotak Bank as usual is sideways, and ITC FMCG is breaking out and ITC also is breaking out. So it's ITC, IT stocks and the ICICI Bank that's holding the market, no doubt about that. If you look at the broader market indices, mid cap and the small cap indices are at all-time highs, extremely bullish. So the market moves are not happening only in the Nifty 50, it's across the market in mid caps and small caps as well, which is heavily positive. Money is flowing everywhere. Now, if you look at the institutional participation, you can see that FIs have been buying big time. Every single day of the last week, the FIs were buying. That's a big boost ahead of the Fed rate cuts, and 15,200 crores of buying has happened while DIs were booking some profit over a long time, but still they were ended up in buying at 2,500 crores nearby. So the yield rate is also the long, so net longs have moved up with regard to the FI DI participation. We have to know it's showing slight bearishness, but in the futures, FIs are still bullish, mildly bullish, medium bullish. That's all it is. So that's good institutional support. The FIs are buying is a great thing, right? And DI is always helping buying. So a lot of retail money is flowing. A lot of foreign money also started flowing in now in the previous 2 weeks. So it's a very good thing. Global markets, if you see, it's we'll try to understand the currencies first, and the currencies was closing flat. You can see the dollar index. Dollar index was flat and it was consolidating the zone. It's falling slightly bearish. Flattish close. US INR also flattish. They're controlled, managed by the Federal Bank. In the sense, the Reserve Bank. 83.86 is a flat close again, but it was bearish down, and then moment is still bearish, still bullish, but for because rupee remains weak even when dollar is consolidating and falling. Crude oil is the next thing. It had major falls of nearly 30%, not 32% from the top swing low. We had big falls, and now it was in the 60s. Now once again it is climbing back. Some reversal green is in there, but it should be fine. Even it was only a 2% up move up to such big falls of 32%. So crude oil, nothing wrong except for the oil marketing companies. As an oil importing company, country like ours, crude oil falling is good for the economy. Gold is breaking out. That's as a hedging instrument. It's good if it will support, but it gives a worry that is it going to be has the market at the top? Is that the reason why the gold is getting a spike? No, the gold is spiked up 3.3% and its new all-time highs. It's a 30% move up from the swing low. Can you believe that? Such a big, mega moves, $2,500 above, right? Consistently moving up gold. Now moving ahead, if you see the US markets, it's green, it is red. So US market is completely recovered and exactly like our market is recovered. And the Fed event of the rate cut, expected rate cut is coming on this Thursday in our time. So it's going to be quite volatile. So market has moved 1 week ahead of that with a solid recovery, and then US markets are green and it's 2.6% up on Dow Jones and Nasdaq, 6% and 4% up on the S&P 500. Heavy bullish rising momentum back in the US market, the same is reflecting in our markets as well. So it's completely positive that the US market, some other market is moving up, gold is spiking up, gold is under control, and rupee alone is weak but managed by the central bank. So our own positive clues on the global markets and currencies and commodities and all that, right? Let's move and see two action numbers for the next week. Now that we have done a lot of analysis. So stock picks, one is Bajaj Finser. That's what he's seeing right there. Two stock picks. So it's Tata Telecommunication and Bajaj Finser. So left side what you see is Tata Communication. You can see a rounding pattern, good volumes above moving average, some consolidation for a break free 1 year or something. And then expected breakout, half tilt stop losses, and it can be 1:2. Risk reward. Momentum and trend is extremely bullish. It's priced above the RSI 60 is reason for the trade. Half tilt stop losses low. Bajaj Finserv is having a cup handle breakout opportunity. 2.5 can easily be there. Momentum is extremely bullish. Volumes are bullish. Trend is bullish. Rounding pattern breakout probability, and there is an inverter breakout also that is happening. Inverter head and shoulder breakout also can be seen there. So two bullish calls on, one is on Tata Communication, and right side you have the Bajaj Finserv, the financial services. Tata Communication left side, Bajaj Finserv. Here we go. The next revenue strategy for the next week weekly is a bear call spread. I am bullish but not that bullish. So basically I am selling this ongoing week's call ATM, and then OTM call is for the upcoming week is bought as a hedge. So in effect, probably is less because market could break out and make 25,537. Then in that case, just book the loss and get out, unless you want to adjust by rolling on the right side, by rolling up. But the thing is, I feel that now that it has made some big moves, it could find some resistance for next week at the 25,500 zones. And there could be small pullbacks that can come in the rest of the week. But this is completely risk defined. The main thing is it is the range that we are getting is very good, and probably not that great. Margin is very less, and very good range is the only reason I am taking. And also I feel that market has big breakout moves and it's heated up at the top. There could be some resistance that can hold it before it hits 25,800, right? So it may find some resistance at 25,500. So this is what I believe. So if that works out and if it is within this range, we make profit, right? So the capital size differs for each person. So accordingly, put in your person size, increase it. But the margin requirement is very less. It's completely risk when you know what you lose and you're still in the game, right? You may be market is heated up. Keep that in mind. It's bullish, but it can break down anytime. So yeah, play it safe. That's a weekly Nifty options strategy. Both calls for completely risk-defined strategy is what we have here. So some of the stock picks and actionables for the next week, and let's try to wrap it up for the next week. So market was surprised by reversing on the upside, once again breaking out to make new all-time highs when it was least expected, and thereby it has trapped the bears this time and formed a bullish engulfing candle instead of a bearish engulfing weekly candle that was formed last week, and that gained momentum in the trend both on the short term and banking. It is also has catched up nearly 2.7% up, and then all the currencies so far happened. This rally is only 10 to 11% on both indices, but the rally on the upside is 38 to 52% of the upside. So multiple breakouts of cup and handles and flags and all that we see in the charts, but it's an ascending wedge and then it's narrowing down slowly. Keep that in mind. So if you try to bucket all the things in favor of the bulls and the bears, you can see that The candlesticks bullish engulfing is extremely bullish. Open interest for the futures and options PCR there are bullish. Bollinger Bands upside expansion bullish bias. About 20 expensive moving average is bullish. If I has a heavy buying board for every single day last week. Mid cash moving indices are heated up in the all-time highs. Indices recover in the short-term bullish momentum and the trend. Right, momentum when the trend has gained and it's back to the bullish zones in the short term. Heavyweight stocks and the sectoral indices are all bullish or sideways. Nothing is there in the bear zones yet. This market is extremely bullish and then it's all-time highs and white is bullish candles in green. It's just falling. So all factors in favor, all the factors seems to be in favor of the bulls. Now what's in favor of the bears? The Banknifty is yet to make the all-time highs, yet to catch up on the momentum on the medium term trend. And it's an ascending wedge, as I told multiple times before. We have to be cautious. It's an ascending wedge that's narrowing, and there is a possibility that it can break out from there. So that's something the caution that you have to keep in mind. Technically, charts are heated up and it's all-time highs, and then it is making very short corrections and moving up. So that's what is happening. But still, market view for as per the technical charts, that's a mild bullish bias. But rates are coming on Wednesday evening on the US time, and then markets can be very volatile before that and after that. So more or less, if Fed interest rate cuts are coming, it's boost for the business and stock markets as well. So there's a potential for upside, but we have to be cautious. And after that, following the event, right? So always keep that in mind that the technical charts are going to go for a toss when big events are there, and then black swans will happen all these times. There is no relevance to the technical charts. Markets go euphoric and fear and greed takes over, and then screw up things. So we always have your hedges in place and portfolio level as well as the position levels. Have hedges if you're carrying forward so that you're still in the game. Surprises and black swans should not screw up your capital. Even though you make loss, it's a happy loss. The levels for the next week is 24,500 and 25,800 on Nifty and 50,000, 53,000 on Banknifty. So as long as this 25,000 is maintained and this is 50,000, 52,000 on Banknifty is maintained, then this is the offer next level rally. So that's all I have. Markets looks very bullish, but it's heated up. Keep that in mind. It's a narrowing wedge, right? Market is making new highs and then extreme money flow is there and there is an event also. Keep that in mind, and that's all I have for the next week. Subscribe to the channel if you think it helps, and hit the like button and then comments and share to others if you like it. I'm active on the other channels like the X and Twitter or whatever it is. The daily posts on technical charts on that. So if you would like to subscribe, you may do that. That's all I have. Happy trading, happy learning, happy investing. Bye bye.